We have a special guest today, Zach Richards, where we really dive into a couple things because he's a private lender. So if you're wondering about the private lending world, how do you find a private lender? How do you know if someone's a good one to work with? How does this apply to profit first? And if you have money on the sidelines, how do you work with a private lender? If you don't have money, how do you get the money in place in order to be a private lender in the future? So he also talked about his first deal, and his first deal went really well. And he talks about what he put in place before he ever did his first deal in the private lending space. He also talks about some of the things as an entrepreneur, really understanding the behaviors and habits and what will help you become successful, especially sticking it out in the hard times. And then he also talked about putting first things first. So a lot of what we talk about in Profit First, and really how he shaped his life around his business and his business around his life, and really those work in harmony together. So I want you to glean a lot of the wisdom from Zach and be able to apply it to your business and to your life. Thank you so much for listening, and I hope you enjoy the episode. Welcome back to the Profit First REI podcast. I have a special guest today, Zach Richards, which I have met him over the years at several masterminds I've been a part of. Zach, thanks for being on the show today.
Thanks for having me. I really appreciate it.
Yeah, and if you don't know, Zach's in the private lending space, which is a space that usually a lot of people want to either get into or they want to utilize heavily in the real estate space, especially. So I'm just going to dive right in here because I want to get into the crux of this thing. So when you were filling out a form, you said you made your first private loan out of your own $100,000 in savings before the REI Capital Guys and your company even existed. So walk me through that first deal. How did you underwrite it with no track record? What would you do differently now too? Like, talk about that first deal, but then if there would be any different glasses you would put on for that one.
Sure. So I'll try to tell the story as briefly as I can. So I got interested in private lending back in 2020. I was working at a software company at the time, and I was working from home, and I was bored. I always wanted to invest in real estate, but the idea of managing tenants and all that just didn't sound very appealing to me, because at the time we lived in a duplex, rented out the upstairs, and had a nightmare tenant in there that I ended up needing to evict. So doing that over and over again while somebody literally living right above us just really kind of soured me on that whole thing. So got interested in private lending. Like I said, back in 2020, thought you needed a ton of money to do it. And then long story short, found out that somebody flipped a house near where I lived at the time and only borrowed $100,000 from somebody to do it. And I said, okay, I was saving up to buy another property, and that's, within the range of what I have saved. So let me see if this actually is a thing that I can do. So I spent probably 3 or 4 months just diving into all the information I could find about it. I read books, I talked to attorneys, I went to local meetups, and then ended up doing my first deal in July of 2020. And it went well. It was with somebody who had done dozens of flips all in my local market, which is in New Hampshire. And he and I did the deal. It went well. And then that one paid back in about 6 months. And then I did a couple more. And then from there, friends and family said, hey, I've got some money sitting on the sidelines in a CD or retirement account, whatever, doing nothing. Is there a way you can lend it out for me? And I said, I think so. Let me just talk to an attorney and figure out, how to do all this the right way and above board. And then started from there with friends and family. And then a couple of years ago, we started REI Capital Guys and started our fund and raised a lot more capital that way. So I wish I could say I had all these lessons that I learned from the first deal. I mean, the first deal I did went really well. I definitely learned things from subsequent deals. Most of it, thankfully, I haven't made any mistakes that have lost any of my investors or anybody any money, but just things of making sure you have a good attorney that does your documents. You don't want, the personal injury attorney that you see the billboard on the side of the highway doing your loan documents. And so it's really just about managing all the downside risk.
Yeah, that makes sense. Sounds like you did a lot of prep work so that first one would go as well as humanly possible. And since you had a good borrower, it seems like it was the perfect storm for that first one. So probably not anything that you would do different on that one then, it sounds like.
No, I was very fortunate that the first deal I did went well, because I've heard lots of stories from a lot of people that they've given somebody 100% financing. They gave them all the repair money up front, and then the person disappeared. And so, yeah, I've heard it all.
Yeah. So that did raise a question there. So you used the money from your savings. Was that the only savings you had? And like, did you go big on this one, or like, did you have other things you were doing? I just want to make sure I got the picture.
So it was the bulk of what I had saved. Yeah, I didn't
Yeah.
have a ton of other stuff going on at the time, and I was pretty comfortable. I mean, at first I thought I was crazy for doing this, and then I really thought about it over the weekend, and I said, okay, it's $100,000 loan. He's buying the property for 170, I think. He's funding the repairs himself. I'm like, I'm gonna be fine here.
Yeah. So it was a lot of
So
that up front, being
it
able to
took
go
some
into it.
convincing.
Yeah, makes sense. And no, I like that. It's sounds like you had a lot of like we said, a lot of the right things going there. So when you are structuring, when you're structuring these private money loans, and when someone comes to you, a fix and flip investor, and they're coming to you instead of a traditional bank, what changes in the deal structure? Like what are the real terms or the things that might be different than a traditional bank that you can make happen as a private lender?
Sure. So where we really excel is speed. Like anybody who's gotten a loan from a bank knows it's going to take at least 30 days. They're going to want to see tax returns, bank statements, all your W-2s, pay stubs, all this kind of stuff. And because we're lending primarily on the asset, we don't need to get bogged down in all of that paperwork. So we do focus who we lend to as well, but really what it comes down to is we focus on the value of the property. We typically lend 80% of the purchase of the property, 100% of the repairs, up to about 65 or 70% of the after repair value. So we've got that equity cushion there. And because banks are selling their loans on the open market, they get appraisals and do all that, which adds more time and complexity. And so that's another thing that we don't have to do. So it's really speed and ease working with us over a traditional bank.
Awesome. No, I love that. And that's what a lot of people want. And with you and your business partner, I could really see that. It seems like you take the time and that you care and you dive into it with these people. And it's more about that relationship, which is also something people usually want from the private lender or like from the people they want to work with. So
the relationship's huge because the first time we do a deal with somebody, it's always there's some underwriting there and just getting a feel for each other's experience and how everyone operates. But we have people that we've done dozens of loans with, and people just text us and say they have another property, and we're already 90% sure that it's something that's going to go forward. So it just gets so much easier on both ends when you have a good relationship.
Awesome. No, I love that. So I want to go a little bit into your personal story, maybe the personal mindset that you have, like going from software engineer to now you're working with other people's capital and you're working with your own capital. And now you're more like that business owner mindset. Yeah. And especially since this is the Profit First REI podcast, I wanted to ask, did anything shift for you when you had to think about paying yourself versus reinvesting like everything back to the business? Like now you're a business owner, you've got to make sure you're taken care of if there's taxes, all that stuff. So was there a mental shift for you? Did something have to change? Like how did habits form? I don't know. Just some of the things that I always wonder when I've got people here and captivated on the podcast.
Absolutely. I mean, I started off right with a W-2 job that was very stable and I did well. And I had a paycheck come in every 2 weeks for 10 years without a single hiccup. And then, going on my own as a business owner, I definitely had to learn the whole, managing cash flow. And you have some awesome months where you close a bunch of loans and do really well. And then there's a lull, and then loans take a little while to pay back before you can recycle the capital. And so just managing that really on my own side, I guess how to describe it is like being okay with that amount of stress, which is easier said than done, right? Like, Oh, I had an awesome month. Yeah, but every month's not going to be that way. So just, keeping track of, all right, how much capital do I have saved in the bank that I need to cover my own life for the next however many months until, more capital's coming in and going to go back out, and just really dealing with that mindset took a lot.
Yeah. Okay, so now I want to ask, since you are a software engineer, do you lean more towards the relationship with people or the numbers side of the business? That's just a personal, curious question I have because of the background.
So my instinct at first was definitely towards the numbers
Okay.
because that's easy to do.
Yeah.
But another shift that I've had to make on my own personally is being able to be a lot more outgoing than I, otherwise would, and building relationships with people, because with business, that's all you have is relationships. And so, yeah, when I first started this, I never would have imagined that I would someday, be on people's podcasts or have my own podcasts or anything like that. So that shift definitely had to happen. And it was hard, but at the same time, I knew that I didn't have a choice.
Yeah. Yeah. So you really, what I'm capturing there, you as a business owner need to know your stress tolerance level and if it needs to grow. Because if you go from W-2 to business owner, there's just a different way of thinking about things, and you're going to have great months, not great months. So that's one big thing. Then the other thing is, if you have a penchant for the numbers, we have to work on the relationship side, because no matter what business you're in, it's relationships. But then it sounds like vice versa. If you're on the relationship side and you love people, you got to know your numbers as well too, which seems like you have that part nailed down, and then you've been growing. That does lead me to, then you did that first deal, it sounds like, with your money and whatnot, but then REI Capital Guys came later. And did you start that company with your business partner? And what made you think you needed a business partner at that point? Or like, why not just do it yourself? So question out there.
Yeah. So we both again, to try to tell a long story as short as I can, we both had our own separate lending companies for several years, and we operated them pretty much the same exact way. And we gotten to know each other through various lending events and masterminds. And so we shared a lot of information about how we run our businesses. So over time, we both kind of ended up running them the same way, and not really on purpose. And then we wanted to really raise a lot more capital because we had been doing just one-off deals with people. And as you can imagine, as you scale, trying to play Tetris with everybody's money gets pretty complicated, of keeping track of how much each investor has sitting on the sidelines and all that. So we wanted to start a fund, but we always thought they were really complicated in how they were set up and managed. And then we talked to these lenders that we know that have a much simpler setup, that we said, oh, if they set up their fund that way and it's working for them, we can do it the same way, and it's a lot easier to manage, and it just makes it also easier for our investors. And so then we started that. So that's really what prompted us to combine our companies and start REI Capital Guys, was really scaling up our capital raise by doing it with a fund.
How have you stayed partners this long? Like, is there any secret sauce or anything that's helped you in that partnership during this time together?
I mean, really, a partnership is like a marriage. It's very similar, and it's really about making sure, you have to know at the end of the day, with any partner you have in anything, that you both have the same goal. So if somebody disagrees with you, it's not because they want something different. It's usually just a different way of trying to get the same outcome. So keeping that in mind, and then really, I think another key is knowing what battles you want to pick. Like, if something is not really important to me and it's really important to my business partner, my wife, or anything, it's really all the same, just let it go. Like, if you know what you can let go and not harp on, then do it. And so I think it's communication. It's knowing you're all headed in the same direction, and just knowing what's really important to disagree on and argue about.
Awesome. All right, I have to pause the episode real quick. If you're a real estate investor who's tired of wondering where your money is going or why you're closing deals but still feeling broke, you need to talk to Simple CFO. Simple CFO is Profit First certified and fully endorsed by Mike McAlowitz, the creator of Profit First himself. Our team specializes in helping real estate investors finally get control of their cash flow, so you keep more money, you pay yourself consistently, and build a business that doesn't run on chaos. We'll help you implement the Profit First system the right way, set up the financial processes you've been missing, and give you a dedicated fractional CFO who actually understands investing and keeping track of your numbers on flips, wholesales, rentals, private lending, all of it. So if you want predictable profit instead of living deal to deal, head over to simplecfo.com and book your financial clarity call today. That's simplecfo.com. Stop living in confusion and start keeping the money you work so hard to earn. Now, back to the episode. That leads me to then, you like to make sure that people are investing and saving for themselves and for their business, and make sure they have a good business, because I'm sure when you lend to people, you want to make sure that they're not upside down and backwards. So when someone is making money in their real estate business, but not consistently investing in themselves, I don't mean just reinvesting into projects, but it could be into making sure they're financially stable or they have reserves or whatnot. Do you see a behavioral gap? And if you do, how do people push past that? Or how have you pushed past that, like of making sure you have a financially solid business?
Yeah, I think I'm trying to see if there's like an answer to that, or an easy answer, I guess.
Easy answer? Yeah.
Yeah. I don't know if there is, like, right. It's something you just got to understand that, like, I don't know. I feel like some people like the stress in a weird sense. Like they're like, that's all they know. Right. And then once you like kind of crawl out of that a little bit and realize that you don't have to be worried about your business and stuff all the time, it does make things a lot easier. And then it's finding that balance too of like, how do you not be so stressed, but then don't take it too much on the other side where you just coast because you think, oh, I've got 6 months of bills sitting in the bank, I'm just going to take the next 6 months off, right? That's not going to work either. You can't take your foot off the gas pedal.
Yeah.
So I don't really know if I answered your question, but
well, it sounds like one word to sum it up would be balance. Like you have to be balanced, where it's like, okay, I'm not just pushing pedal to the metal all the time, because we've seen that where it's like
you get burnout. You can't.
Yeah. Addicted to the deals, and I just got to get the next deal. But then at the same time, they're burning everything with themselves out, the business, their cash reserves, everything,
their family, all of it.
Yeah. So, okay. So I like that. So it's more of the, can we really be balanced here? And I like, this kind of ties into what your answer was before, is your stress tolerance level. And like, where are you in this stage of life? Like, you cannot build this huge monstrosity if it also blows up everything else in your life as well too. So.
And I think with balance is, it's not like it's balance every single day either, right? Yeah. Like some days, some weeks, some months, you're definitely working more, or some month, you're working a little bit less for whatever reason. But I think it's find the balance over the long run.
Yeah. And I like how Jim Quick puts it in his books. It's more harmony than balance. Like things have to harmonize to better. Yep. To make sure that everything is in sync, at least if they're not always taking the lead role. It's like, okay, is it at least in harmony now? And like, we're not totally out of tune with everything. So
because balance sort of implies like they're equal, and that's not necessarily the case. Yeah,
that's very true. So yeah, I like that a lot better than using that word. Okay, cool. So then let's get into, so like I said, since it's the Profit First REI podcast, even if you're not running Profit First totally on your own, you are built around a very similar idea. When we were talking before, had you fill some things out, you want people to pay themselves, especially via passive income. So if someone's using Profit First, but they have like a reserve or a tax account where a lot of it just sits in a low yield bank account, what case would you make for someone moving that out of those accounts and into like a structured lending position instead of leaving it parked?
Yeah, I think you definitely can lend a lot of that money, because that tax money, right, it's earmarked to eventually go to the government. You're just waiting for as late as possible till you have to send it in.
Yes.
Right? And so, yeah, I think people definitely can put it into lending or some other investment like that. But I think the one thing to keep in mind, though, is liquidity, because if you don't buy property with your tax money, I would say, because if you need to make that payment in 6 months or 9 months or something and need to get the capital back, that might be a little bit more difficult. But something like private lending, where if you're doing shorter term loans or you're placing it into a fund, for example, like ours, like we don't have a lockup period in ours. We just ask for 90 days notice if people need to get their capital back. So something like that might work, just depending on what your cash flow schedule is going to look like.
Oh, awesome. So I like that for your specific fund. It's a 90-day. So you would just need to say, I can't have an emergency where I would need all my money within 90 days. It's like knowing before you go into something. Because like you said, if you buy a property, things come up. You think it might be 3 months, but it's like 12 months later and it's still sitting there because the city is
going to do.
Yes. It's like, what are we doing here? So there's all my tax money tied up there, but knowing what you're getting into before you get into it and where to put that money that gives you the best return, and not just sitting around and, getting what, 0.1%, or in some bank accounts they're 1 to 4% right now, but you can do a lot better if you're in the real estate space and have access to people like Zach and his company REI Capital Guys. Then this is some of the things that you can put that money, especially if you're running profit first and you have excess capital that is sitting around. So I did want to ask that then. This is just a personal question on the business side. I wonder, I don't know, have you worked with people that have used profit first or as borrowers? Or I guess I would also ask, if you haven't, if someone has a system for their money, does that factor into if you lend to them or not? Not if they have it set up, but like, does that make them a more secure borrower if you were to see a system like profit first set up in their business?
I think it definitely would. And we do go a little bit into people's financials. We ask for personal financial statements and things like that. So we can kind of tell if somebody seems pretty organized. And if somebody has, this is what I expect to owe in taxes, this is the money that I have in this bank account, that definitely would make us feel a lot more confident in somebody's just ability to execute a project, and they have themselves squared away, their life squared away. And so I definitely agree with that. Okay.
So you say it's definitely a bonus. It's not like obviously the tool where you're like, oh yeah, this is a hard yes or hard no, but it's like, this is where, if I can see organization here, they're probably going to be running their their properties and the projects like this as well too. Cool. I like asking.
That's what I'd say. Yeah.
Okay. Then in the lending space, what do you see some of the most common pitfalls that people are running into today that you're lending on? Or is it like there are properties sitting longer? Are they, I don't know, capital's being tied up more? With the market, I like to get a pulse on the market for the people that come in. And I don't know, are you seeing any problems, multiple problems, one big one, anything that you could share with our audience?
So we're definitely seeing properties sitting longer on the market. Like used to be, we do a lot of loans all over the country, but I'm personally in New England a lot. And it used to be like last summer that you put a property on the market on a Friday, and then by that night or the next morning, you'd have half a dozen offers and it'd be under contract. Yeah. And that's not really happening so much anymore. Stuff is still selling. The prices haven't really come down. It's just things have been sitting on the market a little bit longer. So, some properties have sat for 30 days or 45 days, and then they end up going under contract. So as the lender, we're still in a great position because we're collateralized at that point by a property that's finished and on the market. So if it takes a little longer to sell, I don't particularly care. We're still getting paid every month. And unfortunately, the flipper's making less money, which definitely sucks. But as a lender, we've got to primarily be concerned about our side of things. And so, the market has slowed a little bit, but we on the debt side are still in a great position, even though that's happened.
No, that makes sense. And I like that from that perspective, because it seems like all real estate investors eventually want to become the lender, want to sit in that
seem that way. Yeah.
It seems that way. And so I would ask you, when, in your opinion, is a good time for someone to either look into becoming a private lender, and where would they even start to learn something like that?
So the time to look into it, I would say once you have some capital that you could lend. And by that, I don't mean you need to have $1 million sitting in cash in the bank. A lot of people have a 401k or an IRA, a 401k for an old job, an IRA sitting around. You can lend right out of there. You can roll that into what's called a self-directed IRA, where it's still treated as a retirement account, but instead of investing it in the stock market or bonds or whatever that you can do through Fidelity or Schwab, you can lend it. So you could do that. You could do a HELOC. I mean, there's a number of different things. So I think the time to look into it would be once you've got some capital that you can tap into, and then how to go about it. It's really depends how you want to do it. If you want to do it on your own, you need to get all of those systems and things in place, like having an attorney that you can work with, a title company that you can work with. If you're not an expert in real estate, you need to have maybe some realtors in your local market that can help comp properties for you, so you can guess what they're worth and all that stuff to track your loans and everything. So that's if you want to do it on your own. If you want to partner with somebody that can place your money for you, I think it's a matter of having a conversation with them and seeing how they do things, how they protect your capital, what's the process to get your money back out. And so really depends on what you want to do. But I think that this is definitely something that people should consider when they have some capital they could lend out.
Awesome. Sounds like they don't have to go out and start their own company. They can partner up with people like you or others, like to go out there and put some of that to work. But like you said, it's really now you're doing due diligence on that part of, that business and what they're doing and what their terms are and all of that. So no, I like that.
Exactly.
Because then you don't necessarily have to jump in and create a whole new business with all new processes, systems, and people and everything. And there's different ways.
It's a lot of work. You definitely can do it. It's possible. That's what we did. I did it, but it's a lot of work.
Yeah. Yeah. And if you're already running and gunning in the real estate world, that's a decision you have to make. Is like, okay, how is this going to make us more money? And do I want to invest more time and energy and effort up front? Or do I want to partner with someone that I trust, I know, I like, and I like the returns, and, your money can still be working for you. So especially if you have something like Profit First in place and you have liquid cash, like to be able to lend, it's worth at least having conversations with people like Zach to be like, okay, what could I put in here and how long is that? And like, okay, well, if I do need it at tax time, okay, it sounds like the 90 days and then I just got to give you 90 days, all those conversations. And we'll make sure we give you a link here at the end. But I did have one more question, Zach. I thought it was really cool when you put on your form that you live pretty rurally and you keep bees. And you're a volunteer mountain search and rescue person as well, too. So it sounds like you're doing some pretty cool stuff. I would say you could probably build a bigger fund and whatnot, but you're being pretty intentional with your life. Going back to what we were saying about harmony, like, have you cultivated that so that way these are the things you've wanted out of life and you're starting to be like, okay, this is awesome because I've got the passive income, the lending, and now, like you're able to do the things that you love to do as well.
Yeah. And that was one of the things, like my wife and I, we've always wanted to live kind of out in the middle of nowhere, which is awesome. Where we live now. And so it's been great with this business that it is passive and it's also a business that I do from home. And I, if I have, like when we travel somewhere, it's a business in a backpack, right? If I have my laptop and I have internet, I can work from anywhere. So yes, that is absolutely a big reason why I wanted to do it. And, lets me do these types of things that I enjoy doing.
Yeah, which to me is like, that's the profit first mindset. You put first things first, and Zach's a good embodiment of that, and like making sure the things that matter are there and building the business around those things. It sounds like that business in a backpack and being able to supply what the business can really do for you. So awesome. I love this. Now, you talked a little bit about people have 401k sitting on the sidelines and whatnot. I know you've got link here at the end where people can get a free download. So I want you to talk about that. Like if people do have some money sitting somewhere and like, so that way they know what they're getting into.
Yeah. So really quick, Fidelity and Schwab, like if you have an IRA or a 401k through them, they'll let you buy stocks and bonds, but they won't let you buy or invest in other things that you're allowed to invest in IRA in, like real estate, private lending, certain other things, because they don't make any money off of that. And that's really the reason. And so I did it for myself. I've done it for my mom, family members, and a number of people that have joined our investor community, of showing them how to take an old 401k or an IRA, roll it into a self-directed account, and then be able to invest in all these other things like private lending, real estate, whatever. And so we've had enough people ask us how to do it that we put together a guide. It's really short. It's just a few pages long that explains how to do it and what kind of considerations you need to think about. And I think if you have a retirement account like that and you're not really happy with what it's doing in the stock market, that this is something that's definitely worth considering.
Awesome. So I'm going to put that link up there. It's REI Capital Guys community.com/rollover dash guide. So REI Capital Guys community.com/rollover dash guide. If you're listening, if you are on YouTube, obviously you can see it right there in front of you. So you can go right there to that website. But this is someone that I trust, someone that has been a part of these masterminds and communities for a long time. And if you're just looking to get started, whether you're a real estate investor who wants to potentially invest in their fund, or if you're just thinking about getting into real estate and you have money on the sidelines, it'd be good to have a conversation. So if they get that guide, is there also a way to connect with you as well? I just want to throw that out there.
Yes. So we do have, our links in the guide, but you can also email me at Zach, Z-A-C-H, at reicapitalguys.com. I'm also on Facebook and Instagram. Just search for me and you'll find me, and you can send me a message that way. And yeah, however anybody wants to reach out, even if they just have some questions and want to chat about this whole thing, more than happy to answer questions for anybody.
Yeah, I will say, it seems like you and your business partner are very more relationship driven than any private lender that I've seen. So, the fact that you gave out your email address, like you can email Zach, and it's Zach, Z-A-C-H. So make sure you type that in, Z-A-C-H. And that's where if you reach out to him, he's going to respond to you. You can get on the phone call with him. You could get on a Zoom or whatnot. And these are people that really care about the real estate community, want to work with good people, and want to help you get to where you want to be. So this has been awesome, Zach. I really appreciate this. We talked about a lot of things. I really liked how you talked about, obviously, the harmony and making sure that the things are in balance throughout your life, and that you're even living out a lot of that now. I did like on your first deal how you said, all that prep that you did, and then you worked with the right person. So it was like the perfect storm for that first deal, which it comes down to the preparation that you did, to really get into this business and really understanding this person and their deal and the structure and everything going into that first one. And then what your business provides really is that speed, that relationship factor, all of that. And then also you gave the tips on knowing your stress tolerance, building the relationships you have in this business, getting around people like Zach and the other people that like the communities that we're a part of, where if you need that support and that community that can help here's what we've gone through, if what can help you. Then you obviously ended right there with how to reach out to you, which I will put that up one more time. This REI Capital Guys community.com/rollover-guide. So if you want to go get that, you can grab that there, especially if you have money sitting in a 401k that's not doing much of anything and is probably lining someone else's pockets right now.
That's
it's time to take back control of your money. So Zach, thank you so much for being a guest on here and providing a ton of value today. And then I wanted to also say, if you are out there struggling and you're like, dang, I wish I had money to invest, or I wish I could reach out to Zach at this point, but you don't have good systems to control the cash that's coming into your business, you can reach out to us at simplecfo.com, and we can at least have a conversation how to implement profit first, how to make sure to get your money back on track, how to keep this money. So you're not like, okay, when do I get into private lending if I don't have any money in my bank account right now? Well, you've got to get some good habits with your money first, and that's what we can help you do. So we'd love to help you there at simplecfo.com. Thank you for listening. And again, Zach, thanks for being on today.
Thanks so much for having me.
That's it for today's show. Be sure to subscribe, review, and share this episode. If you're serious about financial systems and keeping more of your profit, visit simplecfo.com to take your free discovery call today.